Welcome back. 48 minutes past 7 here in Paris. You're watching France 24's Morning Edition. We're going to have a look at the business news. I'm joined by Marcus Carlson, the boss of all things business here these days. We're going to begin with the Facebook frenzy, Marcus.
Absolutely. Of course, for Facebook shares, they're going public this Friday at around about 11 a.m. Eastern Time in the United States, or around about 5 o'clock here in Europe, Central European Time, 1700 to be specific. Now, the price has been set at $38 a share, and this would value the entire company at around about $104 billion. So quite a steep price tag there on Facebook. Now, this is the second biggest initial public offering in U.S. history at around about $16 billion. Around about 420 million shares will go on sale. Now, all of these figures, they mean that some men will become very, very wealthy. The 28-year-old chief executive, Mark Zuckerberg, for instance, his holding in Facebook is worth around about $19 billion. It's not too shabby either for his co-founders, Dustin Moskovitz, as well as Eduardo Saverin. They too making money off this initial public offering. As Facebook goes public, though, there are a lot of concerns about its ad revenue model and how it actually makes money. And for more on that, we can turn now to our digital media editor, Eric Olander, who's with us right here in the studio. Now, that valuation, $104 billion, as I already said, that's quite a lot of money. How does Facebook actually make money at this point?
Well, they have a very simple model. It's those little tiny ads on the side of the page, next to all the cute videos of the babies and the cats and all the social media updates are these little ads. Now, those ads, for most people, don't really pay much attention to. And that's really one of the big concerns is the effectiveness of it. General Motors this week just withdrew $10 million of their advertising budget from Facebook based on the fact that they say they're not attracting a return on investment. So one of the concerns is Facebook must grow its advertising model and its revenue model beyond just those little ads that are on the page.
If we look at the $38 a share pricing, is that money then worth it? I suppose that's a key question that investors will now answer.
Well, that's trading at 100 times earnings. Take into context, the rest of the S&P trades at 14 times earnings. So this is a very, very high multiple for Facebook. There's a lot of pressure on Mark Zuckerberg here to increase revenue, to increase profitability. Right now, they're generating about profits of $1 billion a year. Now, that sounds pretty good, and that's what separates Facebook from some of these other tech IPOs that we've seen over the past year, Zynga, LinkedIn, all these others. They've not had that steady revenue stream. However, when you look a little more closely at the numbers, $1 billion is about $1 per user. There's about 900 million users on Facebook. That's not a lot of money extracted from each user.
What does this mean then? Now, I suppose you refer there to the 900 million users that there are around the globe at the moment. One concern is that a lot of them will simply decide one day or another to pick up and leave Facebook. That would be a disaster for this company, wouldn't it?
That would be a disaster. That's one of the less likely concerns right now, is not that people will pick up and leave, but it's that people get bored with it. People maybe, again, the ultimate protection for Facebook is my mother. My mother is on Facebook and she's not getting off of Facebook. The question is will she check it 3-4 times a day, or does she go down to 1 time a day? Does she go down to 1 time per week and whatnot? Other couple concerns. 70% of Facebook's population now is outside of the U.S. Their U.S. market is becoming increasingly saturated. Hard to grow in that market right now. There's a lot of new competition coming from other social networks, Google+, Pinterest, these other small kind of niche social networks. Other key concerns, they're not in China. They will never be in China. They're not the dominant social network in Japan, in South Korea, and some other places, and they have to monetize in places like Indonesia, which is a very large social media market, but not very profitable.
So they're under pressure there to really get the money, so to speak, get the money rolling in from advertising in Indonesia, in Turkey, and other emerging markets.
That's correct. And the holy grail here is, in fact, mobile. Over half of the world's internet consumers now are accessing the internet first on a mobile device. Facebook at this point does not have a revenue strategy for its mobile platform. They do hope to change that, and that's what you're buying today when you buy Facebook stock. You're not buying the company in its present form. You're buying it in the next 4 to 5 years when they evolve these revenue strategies for the mobile platforms and these other new emerging platforms.
All right, interesting indeed. Eric Olander, thanks very much indeed.
We're going to have a look now at the very latest on the markets.
Yes, and let's start with Asia because we're seeing fresh tumbles over in Asian trading this Friday. Asian stocks, they're taking their cue really from Wall Street on Thursday, where the indices also closed down. As you can see, the Nikkei 225 in Tokyo down almost 3% this hour. Now, let's also take a look at US stocks. They were weighed down by signs that manufacturing is slowing down. There are also continued concerns, of course, over the political situation in Greece and that its problems will spread elsewhere in the Eurozone.
Well, Greece, of course, very much in the spotlight, as so often these days, Marcus. And fresh warnings, indeed, that the country's exit from the Eurozone could really be on the cards.
Yeah, these warnings coming from the credit rater Fitch, which has come down to downgrade Greece once again. It was already in junk territory with Fitch at B-, but now Fitch took it even further into junk territory to CCC. Now, Fitch quotes the higher risk that Greece will have to leave the Eurozone after the inconclusive election on the 6th of May. And while we're on Greece, the head of the left-wing party, Syriza, appears to be playing chicken with the rest of the Eurozone. He's told the Wall Street Journal that there's only a small risk that the rest of the Eurozone will cut off funding from Greece. If Eurozone members do cut off funding, Alexis Tsipras says that Greece won't repay them its loans. The Syriza party came in second in the Greek elections. They want Greece to walk away from the austerity measures it agreed to in a 130 billion euro bailout deal from earlier this year.
I'm going to stay for a moment, Marcus, with the Eurozone's woes and Spain. Spain's problems, in particular, its problems with its banking sector.
Yes, Fitch came out to downgrade Greece earlier, and now Moody's as well has come out to downgrade 16 Spanish banks. And that really highlights the problems that the Spanish banking sector is now facing. And Rebecca Bowring, she's got more on that.
Spain's banking sector is once more in the eye of the storm. Moody's attributed the downgrade to ongoing recession, as well as the government's borrowing problems, which affect its ability to support banks. They include the Goliath Santander and number 2 BBVA, both of which saw their ratings slashed 3 notches. Bankia was not included in the review. Part nationalised by the government on May the 9th, it's the bank most exposed to the bad loans left by Spain's property boom and bust. Its shares ended down 14% on Thursday, having fallen almost 30% amid rumours customers were withdrawing their savings. Up to €1 billion in total, according to a report in El Mundo. The government denies there's been any, quote, exit of deposits. Prime Minister Rajoy has tried this week to reassure investors and will later appoint independent valuers to assess bank loans.
We have to clean up the financial system. Our financial system is having a hard time financing its debt on the markets, and it's also not giving credit. In Spain, this is the way forward, and we are working on it.
There's still a long way to go, though. Spain's economy shrunk 0.3% in the first quarter. Unemployment still hovers around 25%. And then there's the threat of the domino effect should Greece elect an anti-austerity government and crash out of the Eurozone.
That was Business with Marcus Carlson. Thanks very much indeed for being with us. In just a couple of minutes, all the very latest international headlines. Do stay with us.